Hello, this is Jarrett Lau, the founder of Profitable Properties Boston. In today's video, I'm going to be covering all the steps that you need to take prior to buying your first investment property. First and foremost, you're going to want to make sure that you have the money in place. And what that means is you want to have your down payment, and you're going to have to decide how much of a down payment you want to put. Anytime that you put anything less than 20%, that means you're going to be paying PMI, which is private mortgage insurance, to the bank, and that'll cut into your profits. So most of our investors will do 20% or more as a down payment. As soon as you have that down payment money ready, then you're going to actually speak to a mortgage broker, and that mortgage broker or banker will help you get the loan and have a pre-approval in place ready, so that when you do make an offer, anybody who is selling as well as their agents is going to want to see that pre-approval to make sure that you again can commit and can close that loan. After you have the funds in place to know how much that you can actually purchase, again, both the bank as well as your down payment will help decide that. So if, for example, you're putting 20% down and you have $200,000, that means that you can buy up to $1 million. 100,000, 500,000. Once you've decided the purchase price in which you can actually buy up to, you're going to look and see what properties are actually available in what areas. So can you afford a condo, or can you afford a multifamily? And in what areas? Every single area and different size of a building or property is going to be a different price. So I'm going to help you try to figure out what areas fit your criteria. And speaking of criteria, you're going to want to figure out what level of areas. So I have three major areas. We call them the A, B, and C areas. And the A areas might be really expensive, really low risk, but the returns might be low as well. B is kind of that middle ground, right? We're going to have a little bit more room for growth. The rents potentially could be more pushed up, but the area and risk might be a little bit higher. And then I have the C and even D areas. That we don't really cover much of D areas in most of our clients, but the C areas are the ones that are on the outskirts of the town that have a little bit more appreciation, but again, the rents are a little bit lower perhaps, and the risk is a little bit higher. So we're going to figure out what your appetite is for both risk and return. It's tough to get everything, so we're going to figure out where that balance is for you. I'm going to send you every single sold listing within the past 3 to 5 months. That will give you an idea in that area based upon the type of property that you are looking for, whether it's a single family, condo, or multifamily, what it is that they've sold for. Again, what's on the market is really tough, but the real value of a property is what things are selling for. Are they going above asking price, under asking price? If under asking price, how much? You're going to want to figure that out so you know confidently that if a similar property comes up, that it's a good deal and that you should be ready to go. You're going to want to figure out the returns. And how do you figure out the returns? You're really going to want to know the rent that the property is going to get you. So we're also going to go through all the rental comps. Seasonality is huge in the Boston market. After September, the rents can drop significantly, so landlords can get their units rented. It's highest probably in the spring and summer months. So depending upon when it is, we're going to average it out and tell you what you can expect, because it's a long-term game in real estate. So we're going to figure out those purchase prices. Have you be comfortable with what's been sold on the market? And then we're going to also figure out all those rents that have been, both rented recently as well as what is on the market right now that you might be competing against. At that point, you're going to be a little bit more comfortable with how much you're purchasing a property for, how much you might get for rent, and then we're going to go over things like a pro forma or a budget. And what that does is it allows you to understand all the expenses that could go into a property, whether it's, again, utilities, maintenance, management fees, all of the above. We have a spreadsheet and we have a formula for this, and we're going to teach you through this. That way we educate you to be able to know when a property comes on the market, how much it might rent for, how much you're going to be spending, per month on expenses, and that'll help you calculate at the end of the day your final return. And what we're going to do is we're going to have this in our database as well. So anytime a property comes on that fits your criteria, we're going to be able to send that over to you, and you're going to be educated and know and have that confidence that when something does come on and we tell you it's a good deal, you know it is as well. If you or anyone else you know is looking for a real estate agent that specializes in investment properties, can guide you through the process from start to finish for buying your first investment property, please think of Profitable Properties Boston.